Hello, Professor. It's me, sharmila. Now I'm going to explain about my assignment that you have assigned for us. For question number one, after my graduation, I want to start my family restaurant as a business. It's a sole proprietorship form of business which will be owned by me and also run by me with few employees. And my mission is to establish a branch of my restaurant by serving quality of food at reasonable price. And my vision will be focusing on what's trending on today's market. And my objective is to be one of the finest family restaurant in Kathmandu. Also, I want to open many branches in Kathmandu, and I will promote my business through different means of advertisement such as social media like Facebook, Instagram, Twitter, YouTube, and so on. And the advantages of my choice is it's very easy and less costly to create generally, only license required. It has less government regulation. It has only income tax, no extra taxes are included. Whereas the disadvantages of my choice in comparison to other general and hybrid forms also includes no separation between the form and the owner, unlimited personal liability, limited life, and limited capital opportunities. For question number two, the goal of the firm is to maximize the price of the stocks of the firm. It also maximizes the return that they will be getting from the investment. For example, if you have 300 share and the market price of the stock is $15 per share, here if the price of the stock increases, it automatically maximizes the total market value. And the goal is different from profit maximization because maximizing the value of business is for long period of time, whereas profit maximization is for short time. And therefore profit maximization is for short term period of time, whereas maximization of the value of business is for long term. Now talking about question number three, agency problem. Agency problem in corporate manager is managers acting their own interests by ignoring the interests of stockholders. Stockholders have delegated to management these people, agents, to manage the business so that they can get the goal and maximize the value of the business. But if they ignore the purpose, then they might be acting on their own interest, so that they are having the agency problems. And a few ways of handling it are time management, compensation to firm performance. It is the price of the stock, as maximizing the price of the stock is maximizing the value of the firm. Mm, Then the second one is general shareholders meeting frequently. Meetings are held to buy the shareholder to deliver the message to the management. Hostile takeover. Low stock prices may entice a corporate raider to buy enough stock so they have enough control to replace current management. The stock price will rise after the new management team fixes the company. For question number four, it's about the differences between GAAP and IFRS presented in the lecture. So GAAP stands for Generally Accepted Accounting Principle, whereas IFRS stands for International Financial Reporting Standard. The, the main difference between GAAP and IFRS are while evaluating the inventories and while evaluating the assets. GAAP is dependent on the Financial Accounting Standard Board, FASB, and it is commonly used all over the world. It is the accounting system with the rules and they follow the detailed instruction guidelines. Whereas the IFRS depends on the International Accounting Standard Board, IASB. This system are commonly used in USA. It provides the general guidelines as long as the company complies with IFRS. It does not allow to use LIFO, but allows FIFO and WA. Here the tax is higher in compared with the GAAP. For question number five, um, gross profit. Uh, gross profit is done by sales minus cost of goods sold, so that we can have gross profit. And for operating income, uh, it's about expenses by adding all these selling expenses, resource, and development expenses, depreciation expenses, amortization, management expenses by adding all these and then subtracting from gross profit, we can have operating income. And for earning before income and tax, it's the amount added from operating income plus other income, so that we can have EBIT. And for pre-tax income, I minus it is gained by EBIT minus interest expenses. For net income, pre-tax income minus corporate tax. And for earning per share, I have used the formula net income by number of share outstanding. And in cash flow, there are 3 sections. That is operating activities, cash effect of change in, no. Operating activities, cash from investment activities, and then financial activities. From cash flow statement, we can have the actual net income, and the income statement generates net income, which includes non-cash expenses like depreciation and amortization along with share compensation. In contrast, cash flow statement removes non-cash expenses. Rather, depreciation and amortization are added back to net income to figure out net cash flow. Hence, the net income and net cash flow are differentiating. Thank you. Stop, Garuna. Stop. Share.
You can even.
Yeah. End meeting हो रहा